right, a good day to all. Sam here with you on a Tuesday, July 17th. Kind of late morning here, and as it's a Tuesday, today we're looking at traditional assets. So we poll our members, let them choose what's going to get analysis. And first up I have here, after our polling, is the Aussie dollar. So we do have a lot of members that are from down under. So my guess is they're interested in what's happening here and what the analysis looks like. Now, first thing I should mention, right? So whenever you're trading in the Forex markets, if you aren't aware of this, you really, and I mean really, have to pay attention to the data that's coming out. So reports are incredibly impactful in the Forex market. So you really have to check so that you're not trading blindly into something without knowing that something significant is coming. So I'm over here on Forex Factory, which always kind of the default standard is a place to go to look for where you can find financial reports about any particular country and how they might likely influence that currency. So if we look here, now here we are Tuesday, July 17th, we have nothing relative to the Aussie dollar. We did last night have the monetary policy meeting minutes released. And as we head into Wednesday, we can see that for the Aussie dollar here, we have their unemployment data. That will be significant. So in red here, you see high impact. So something to be conscious of if you're considering trading, if you're in the market or looking to get in the market. You really have to recognize that that will be a market moving release. Now I'm here on the daily knowing that I've got that volatility that's likely to hit the market here. So as I look at this here, now I'm going all the way back to here, what are we, 2008 low, and where we are in this larger degree here. Now coming down here, so we can just draw a couple. Well, so here let's do the basics, right? So we'll start here. Look at this fib swing here. Now we're through the 786. So you know, could it be a 2? I mean, to really get it some perspective, you actually have to go to the 3-day and really look at it. So if I'm working from that low, we see it here, you know, 1, 2, 3, 4, you know, I don't think that that's enough to trade off of here, as in, like, you know, this could be too many different things. So what can we say with certainty? Trying to get a count on this is, I don't think we need to. So let's look here. From swing low, swing high, I still maintain an internal retracement. Swing low, swing high, we are still internal. Now, granted, we've gone very deep. So as to what this ends up getting labeled in the very largest degree, I mean, we're going back all the way here to 2002. I don't know that we need to really overly concern ourselves with that. I have a pivot here. I'm internal here, and I have something that may be taking shape here. So let's go back to the daily and get some perspective on this. So with that established, that all I know is I've got an internal retracement here, and I'm not particularly concerned about what the very longest term count is. As I look here from that low, I've got something potentially taking some shape here. So just very rudimentary analysis here, and let me see if I can open this up so you can see it a little bit better. Here's our this is our 2016 low. Coming into this, it would appear that I'm working through some sort of a diagonal. So I have a candidate here for a 1-2. So just basic stuff here. Now this is where it's a little tricky, and it's somewhat inherent in FX, right? So if I look here up to my 1. Well, you can say, okay, well, if that's 1, and if this indeed, if I have this labeled correctly, that we end up with, this would have to be, so it would have to go like this, so that if that's what we've got here, so we've got some sort of very complex B going in here, there would be the subdivision of an A, B, C within that B. We're effectively, you know, we got a lot of topping action up here. But from that 2, we'll take note here now. So you can look at that and say, okay, well, we went, there's the golden zone, we went right to target. Well, no doubt. In fact, we did it twice. Here's the conundrum. So you look at that and you say, well, we've broken the 65. So how does that affect the algos? Well, it would appear that for whatever reason they stayed with it. It could be that it was here. So it's just a conundrum with FX. You get a little more volatility, and this is a challenge at times when you're trying to diagnose whether or not you've got an impulse or a diagonal. You can see very small overlap here because of the volatility, because of some of the stop running and game playing that happens in FX. Could have been done at an hour where there was very little volume, so you've got a little stop running there. It's hard to say. It's a sloppy retracement. It's just barely breaking that 65, yet we go to target to the tick here, and now we repeatedly are hitting it. So it's just kind of a judgment call that you have to make. So you could look at it and think, well, okay, wait a minute, let's play it like an algorithm would play it. So if we have the slight with the slight break here, so look at it this way. So we come here. Okay, they break the 65, meaning that they flip to bearish. So if we go swing high to swing low, and we look here, well, here's the reaction at the 50, yet we get through the 65. So that would be 2 losers in a row. Now, granted, I am here on the daily. So now we've gone back to bullish, right, with the stop out here. So we go swing low. Like we get this here. So here's 50 to the tick. Now that's close enough that that's likely a front run. Even if you just dig in here a little bit and say, well, could it be that they went to this 50? Well, again, it's kind of a judgment call. If they went here, right? So here's the 50 to the tick. Now let's get it. Am I right on there? There it is. So here's the 50, right? Vegas wave, note. So if it's 1, 2, and this is unrealized, and they don't move it, well, then this is close enough. This is likely a front run on the target. So they get it after getting stopped out. They get it there. So they took 2 losers. Now they get it right here. I'm assuming you can see this. So here it is right here. So they get that winner there. So, and then here's the tell, here's the reaction. We go straight down. All right, so now we're looking here and we think, okay, well, wait a minute now. If we're going all the way back here and considering if that's my B, well, what do we do here? Now we go golden zone. Right, so from here to this B here, now so that's my guess what they've done here. If we go all the way up to the B here, then we have the same conundrum here. That we've gone through the 65, so if an algorithm is switching, so we'd go from this pull here to this low. Right here, they break here, so now they have to get back on the long side, so they've taken another loser. So I go from this swing here to this pivot here. And we do it yet again. Look here, we break again, right? So tricky, right? So again, algos, they aren't always to the tick, but note here, look at this, right? So you wonder, did they, and I can't tell you, I can just tell you, all I can do is kind of track their footprints, that for whatever reason, it would appear that they stayed with these pivots, that they stayed with them. Despite this little break here, this very small break here, this to the tick to tick run here, this, and then the ensuing reaction, leads me to believe they stayed with that pivot. Well, I can't explain it, right? I'm not calling up the guys who write this software to get their details. All I do is the same thing I'm trying to teach you is, can we identify? We don't know. I don't know what happened there. Can't tell you that. All I can do is the same thing that you can do, is try and figure out what they did last. What are they doing? Where are they? What was their last trade? Now, we got to decide on what time frame we're working from. So on the daily, again, it could be they're just allowing for some slight overlap here. We did it twice, then we did it slightly here. But again, upon trying to read what they've likely done last, it would appear that they stayed with those pivots from this to the tick to tick. So now, where does that leave us now? Well, let's think about that. Okay, if that's 1 and with our Elliott hats on, right, so remember we're working through this here with a combination of an Elliott view and additionally adding what we know the algos are prone to do. So if I look at it with my Elliott hat on, it would appear that I could have a diagonal underway. So if I think about it this way, so if this is a diagonal, if this is 1, 2, and I've gone up for my 3. Well, I'm looking for a relationship between the start of the 1 to the pivot of the 3. Now note here, it looks like I get an expanded B wave here. It looks like this is an ugly B, no doubt about it. But it would appear that I get an A, B, slight expansion here in the B wave, and then I've come down. So if I think about that, and consider that possibility, because we've got to prove it out. So if it's a diagonal, I'm looking for a relationship between the pivot on the 3 and the start of the 1. All right, so what do? Well, now we've gone golden zone. Well, now, okay, so what do we conclude from that? Now, just pure algo thinking, well, that would be the buy. But we have also seen that repeatedly this market has had a few little pushes through the 65. So I wouldn't... So think about this now. So we're looking at going, is that worth buying there right now? Well, knowing that we have this data being released tomorrow night, I would be very cautious about that. Now, this looks like a smaller risk profile here, but when we take it down to the hourly, right? Remember, we're on a daily chart. I would be cautiously bullish here because, again, just as I've showed you here, this tendency to break the 65, if it's doing it repeatedly back here and here. So here, this pivot, and this pivot all did it. Right, so, do we have enough here to call this 5 in? Well, we certainly are in the golden zone, so that makes you want to look. We've got a diagonal here that's in play. I've got a good ABC coming down. All right, well, let's go down to some smaller time frames and see if we can make sense of it. So I'm going to go, let's go to the 3 hour. And a lot of times I'll go to the 3 hour just because I know most people are going to go to the 4 hour. So here, let's look at this coming down. Now, there's a lot to dig in here. So give me 1 second. All right, I'm back. Okay, so from this pivot up here, so as you'll recall, I had this as an expanded B wave, just barely getting through this prior high up here. Right, so very, very slight little break here, a couple of pips to get through. So the only way I can see to count this as a B wave is that I've got a very skinny, you can see the little ABC there. So I do get the little pattern correction, but then I rip up here for this C. It would appear that gives me my B. Now here's where this gets very tricky. So this is an interesting combination of algo trading with Elliott wave at play. All right, so let's see if we can make sense of it. So there's a couple of things to consider. First, the Elliott count is very tricky here. No question about it, because we have, so at first glance, you're thinking, oh, well, 1, 2, and then I got 1, 2, 3, 4. It doesn't play because the length of this wave relative to the first wave is not long enough. So it's a more complex correction. Now, after working through all of these pivots, what I come up with is that we've got an A, a B, and that we're down here. Potentially, the C is in. I can get 5 coming down here in this 5. From this pivot here, it's very technical. So let's take a look at it. So from my 2 here to my 3, down to my low. Well, interestingly, so take note here. So make sure I've got it right on there. There it is. Okay, so we get like 2 pips through the 65. Again, it's a little bit of sloppiness that's inherent in FX. You have to allow for just a little more cushion there, as I do see it often. Now, looking at as this comes down, now the question becomes, well, did they maintain the swings? Well, we can see the answer there. So even though we get through by a couple of pips, what do? Right to target. So that makes me think that this pivot here, the algo's played that and they've come down. Now we've seen the reaction. Now that does not mean that this must be our absolute low, that our low is good. But it does mean that I've got an Elliott count. I've got a contender here. Nothing more than a contender for my 4, given what we're looking at here. But this has been good all the way down here. So you can see this, and I'm going to take you through this just to teach you a couple of things that are this comes from a lot of screen time of trading this. So if I look here, now we were trying to analyze on the way down. Now remember, here in FX, go short, long, just as easy, not the complication that we deal with when we're trying to short a crypto. So FX, easy to be short. Okay, so let's take the first one here. So we go swing high to swing low. All right, well, so we go right to the 618. It's front run by a couple of ticks. So perfect algo trade, except here, what happens? We don't make target. So one of 2 things happen there. And there's no way to know here. That's kind of the conundrum of it. There's no way to know. It's just because we don't know what the algorithms are doing. We're just trying to find their footprints. So we can look here and say, well, either they stayed with it and they ultimately got it. Well, actually, they got it right here. So you can see it. They do get target, right? So from here's 618. That's a 2-tick front run. They get it to the tick right there. Right, so algo win, reaction, yet we keep going. All right, let's take that off. Okay, so we have one winner realized. Well, often, here's the other scenario, which you will see a lot. If they don't make it, that's too far for a front run on the target. So if they don't make it, there's one of two things happen. Either they just stay with it, right, which we can see was effective here, or they pulled to the next pivot. All right, so now we look at that and we think, oh, well, here's a front run on the 50. So that's just perfect. So I think I know what they've done. Well, we look here and then from the front run on the 50 here, well, they come up short here. Likely that's not close enough for a front run on the target, so they stay with it. But they get here and it just blows right through it and they actually end up getting second target. That's a possibility, but here's another thing that you have to watch for. If they stay here, the question becomes, what as this is going back up, what are you thinking? Well, let me show you this. So if it's pushing back up and you're pulling from here thinking, oh, well, that's the last pivot that worked. Well, what happens here? Well, we break the 65 here. Now, having traded this for a long time, I know that very often if I see it on the most recent pivot, if we don't make target, and we've broken the 65 on the most recent swing low, swing high. A lot of times what's happening is they've stayed with the initial pivot. So that's going to make it hard for you guys to see. Let me get this off. So that's what makes me think that I've got this as an A, B, and that ultimately now they get second target. Well, they get target here, but now we get this third target. So it's just something to watch for. If you were to take that trade and you got stopped out, you got to immediately go back a pivot and see if the fact that you got stopped out. So let me recreate it again. So if you're from here, from this pivot to this low, and you get stopped out right here, immediately you pull back to one and see. So you're thinking, well, why does it stop there? Right? That's your first question. Well, whoa, wait a minute. What happened there? I just got stopped out right here by about 10 ticks, and now it's gone straight down. Why? Why does that happen? Well, most likely you got to go back a pivot, and then you'll find it. Right? So just something to keep in mind. So as that relates to where we are now sitting, as I've just shown you, this was very technical coming down here. I've got a good 5 here. Does this look like a 1? Well, I do like the 5 coming down. So let's go to the 1 hour. Look in here. So here's the candidate for my 5 down here. So could this looks like I can get 5 here. So it looks like I might have another diagonal possibly. If we try and label it, looks like I've got 1, 2, 3, 4, and it remains to be seen if I'm going to get up for that 5. Oh, pardon me. Look, nope, can't be the 4. So we can't overlap. So let's revisit that. So yes, we do get a very slight overlap. Okay, so we got to rethink that. So this would likely be, we got to relabel. All right, so here's analysis on the fly. So what does that leave? Well, I can see a 1, 2, 3, 4, 5 here. So I can get either an A or a 1. So let's think about it. So if this were my 1 wave and this were my 2 wave, it looks like I can get 3 coming out of here, but I violate here. So I have to disqualify that. It's no longer a candidate. Well, then your first thought is, oh, well, perhaps it's a diagonal, but I can't have a diagonal overlap the 2. So it can't be that. All right, so let's take that off. So what does that leave? Well, it certainly could be an ABC. So from here, I can get an A, a B, and a C. All right, and then coming down from that, if this is corrective, well, I'm looking for something to tell me that I'm looking for trend continuation. So meaning that this cannot be the low. Well, likely, I shouldn't say that. It's likely not my final low. Right? Despite the fact that we went right into the golden zone. We went right to golden zone. So if I look here, then I think, okay, is this technical? Well, let's take the length of the A, project here. Well, we're between the 50 and the 618, and we get target. We get through and almost get to second target. So you think, okay, ABC. All right, that works. Well, let's see. Is there anything here? No, we've broken on this side. So from just looking at retracements, not thinking Elliott, with that break and the break of this pivot, that's reducing possibility. So it's not necessarily a bad thing because it's eliminating options, right? With our Elliott hats on, we can use the rule set here to create a probability scenario. All right, if it's an ABC, well, what's happening here? Well, it looks like you could make a case that it looks like I can get a 1-2 out of this. And then I can get 1, 2, and then it looks like I go 1, 2, 3, 4, 5. So there's 3. If I'm going up here for 4, looks like I might have 5 coming down here. All right, let's get that degree to something that makes sense. We can go down here. We'll go to green. Okay, so if could that be a diagonal? Well, let's just think about it. So let's take the pivot here to the pivot here. What do I get? Well, note the same thing again. We break it by just a couple of ticks before we start moving lower. So what are the algos doing? Well, let me get it right on there. This is a little bit, what you'll find is that markets you'll find that there are personalities here. There's a characteristic. So, for example, the euro really likes the 786 and the 1272. You see it all the time. Now here in the Aussie, you've just got this tendency here to get a slight break outside of the 65 before it turns. So it's just something you have to recognize as a tendency. So while this could play as a 3, 4, and 5, so we could have the fact that we break the 65 with our Elliott hats on doesn't break and doesn't violate any rule set, as long as we don't overlap the 1 here. Now we're in lower probabilities here, but note here I've got a clear ABC, so this would appear to be some sort of an ABC going in here to give me this candidate for a 4. Get that up a little higher. So, again, could this be the 1? Do I have it wrong? And it's 1, 2, and then I've got 3 waves down here. So that actually may play better because now I've got an ABC into a 1, into my 2. I've got an ABC into my 3, an ABC into my 4. Well, then I look here and say, well, I'm looking for the reaction. Ideally, you're looking for it at the 50, and you can see we got a reaction there, but had to go back up and retest it. Now, are we headed back down here? Well, let's think about that. Would that make sense? And how does that relate to where we would be in the higher degrees? Well, just looking structurally now, first things I'm going to start looking for is market geometry. Do I have any help here? Anything that I can identify? Well, if this is going to go straight down, I'd certainly want to be paying attention to this as a possible roadmap. This could be bringing me down. We do have that major report tomorrow, so that could be the kind of thing that drives it down. There's no way to tell, which is why trading into a major report like that is always a high-risk scenario, and I don't advise it unless you're currently in the market and you have all of your risk parameters already established. You know that's coming. Now let's pull back out. I will go to the 4-hour here and see what that would mean to us. Well, if this is the 4, right, and this is corrective, well, then that's not good for bulls. Right? So looking at how this could be playing down. Okay, so from this 4, it would certainly appear that I've got a very clean impulse. Looks like I've got 3, 4, 5. All right, so that was the initial thought that we had this as the low. But if this is going to continue to come down, we got to rethink that because this could just be 1, 2. Right, so we could have a much more substantial 1, 2, 3, 4, 5 going in. Now let's get that in a degree where it makes sense and we can see it. So let me get up to, we can go to micro. That'll work. All right, so let's think about this as the 2. Well, if this is a 1, where are we looking for the 2? Let's get our 1 on there. So we're looking for the 2 at the 50. All right, but 50 in the 786. Well, if that's a 2, well, could front run on the 50? Very well could be. 1, 2. Well, that means we've got a lot more to go to bring this back down, meaning we are going to be violating that 65 on the larger degree yet again. So here, I'll take this off because we don't know what to expect. So if that's 1, 2, think about where we're going for the 3. That puts the 3 potentially now way, here's the 1618. That would put this all way down here. Right, so this gets, we have to rethink that. So let me pull this off here. All right, if that's 1, 2, and we are just starting, so as this is potentially a diagonal, we would just have a leading diagonal, the one wave of the third wave of this degree. Does that make sense? Right, so we know we can allow for a diagonal, a leading diagonal in the one wave or an A wave. So because I have a contender here for a diagonal coming into this algo target down here for this pivot, if this is a 2, well then I've got to subdivide, right? So it's going to look like this. So we're going to get some sort of a 1, likely a leading diagonal if this is going to continue. Then we get the 2, then we get the 3 and the 4 and the 5 to bring us down here to this 3. So we could just be getting started here. So this is where, you know, you really have to think long and hard about what makes the most sense here. Let's go back to the daily and put this into context of where the larger degree count is. All right, so so think about that. If this were a 3, then and this is an A, and we're going to keep going down, well then that makes me rethink the whole thing, because we can't violate this, right? And if we're going to go into a true Elliott count, then this whole thing has got to be rethought and reconsidered. Meaning that the alternate is that instead of 3, 4 with a 5 up here, that I've already got my 5. All right, so this ABC completes that. This becomes my 4, so it looks like this. All right, so this is, get used to this, guys. This happens all the time. So where is that? There's my C. All right, so let's think about that. Does that work? All right, well, if this is my 1, 2, 3, 4, 5. So you might say, well, why didn't you think that in the first place? Well, I mean, this is the process you go through as you're trying to figure out what's going on or how to organize it, which is all we're trying to do with Elliott Wave, is organize the chaos and the swings. So if I look here, okay, well, that makes sense. Then I look here. And I go, okay, well, that's reasonable, because we're always looking for, in a diagonal, I'm looking for the relationship between the start of the 1, the pivot of the 3. I'm looking for it at the 50. So this becomes an unrealized target, right? We don't get target there, right? That's what they're after. All right, and the whole thing breaks, well, and we have not broken down yet. So, okay, so look at this. So the algos that bought here have this as a target. They will continue, they will defend it here at the 618. So this little reaction is likely that same, whatever group of traders are behind that algorithm, they are likely kicking in here trying to defend, which is why you see this little pivot, this little dip into the golden zone, and then we're getting a reaction trying to come out of that. Now, here's where it's, again, it's a judgment call. If we have a small little break of the 65, right, that's going to be interesting. What we want to see actually is a bigger break of the 65. So we're not left wondering, oh shit, are they doing the same thing over here? Is this just some little wicking, stop running market bullshit that they do in FX, and they're just running it before they rip it back in your face and take it up higher? Happens all the time, right? It's just one inherent in FX. So you have to get used to that, which is why I tell you to trade longer term rather than short term, because you can get eaten alive in here just with the volatility. All right, so let's think about that. So if this is complete as a one wave, well, where does that put us in the whole broader context? Well, if we're going to break down here, it can't be a one wave. If we're going to break this low, now that's a long way down, but this would be the 3 wave, 4. So all of the ingredients are there for this whole thing to get relabeled as an ABC. Right? So what does that mean? Lack of certainty, lack of high probability trading. So a diagonal here would imply that this low is not going to be violated. But wait a minute, if we're looking for a 2 and I'm taking it from swing low, if that's my 5 high, well, I got to pay attention down here, right? So if this is going to continue to move lower and we're going to go 3, 4 and then come down for a new 5, well, you know, I mean, as long as we stay above this pivot, there is the possibility that this diagonal as a leading diagonal for a one wave is signifying a major trend change. As long as we stay internal, that possibility stays alive. So this has to go over here. So having gone through all that becomes a question of, well, shit, do I even want to trade this? I got a lot of uncertainty here. So as I see it, the better trade right now looks like the short side, right? And we can see the market kind of leading us into that. Now, in FX, you can't read too much into one day's trading, because that could very well be just the bear trap, right? So all we can do is look at the swing relationship and say, what does it imply? Can I get a reasonable count on here? Does it make sense? Does it have the right symmetry? Does it fit with the longer context of where we are? Right now we have, if you guys are looking at the market, so we get a little Fed speak today and the market just explodes, right? So, that's impacting the dollar, and it's of course that's impacting currencies all over the map. So let's get this right on here. If that's my 5, yeah, I would be very cautious going. So let me put it to you this way. If I were not in the market here, I would not be looking to get in until after that data is released tomorrow. So let me pull this out. If this pivot is going to hold, then we can rethink that. They're going to need some very bullish numbers to get this pivot to hold. If it does and we start to move away from it, then we can rethink this. But as it sits right here, right now, having just worked through all of that, which is what you need to do if you're saddling up to an FX trade the day before a major report is released, you got to think long and hard about whether the risk is worth it, right? The short sell you're late for that. If you're trying to buy, then you're trying to buy right in, you are buying golden zone, but you're not buying into a count that makes sense where there's clarity. So why take the risk? Why take the risk, particularly the day before a major report? So I would suggest wait, see how the market absorbs that data, how it responds. Does this pivot hold? If we get something that's bullish and we get the market to respond that way and we're pushing up here, challenging some of these pivots, well, then maybe we rethink it. But if this gets traction and just continues with this as a 2 and we start heading down, we break the 65 substantially with good volume, and this starts to roll off of that data, well, then that keeps the idea that this is 1-2 going strong. So not enough. It's just not a trading environment that warrants taking a new position. But it's certainly one to be watching as to how the market responds to that data. All right, guys. Well, that was a little bit longer than I thought, but I had to do a bit of real-time analysis there to try and get a count that works here and understand what the risk-reward looks like. My view, you sit and wait, at least for a day. All right, guys, I'll wrap it there.